Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be a quick trade update and also trade entry that I've taken. Currently I'm holding 3 different trades, and I'd like to walk through these 2 new trades that I just entered. The first one being AUDCHF. So AUDCHF, the reason for this entry, the weekly is technically a buy, this being the higher high and this being the higher low. And as the market came to this particular area, the box that I've drawn over here, which is my resistance zone, I see that the candlestick has been slowly reversing, or I would say rejecting from this area where it has printed a doji indecision candle 2 weeks ago, and even last week it ended up as a doji indecision candle. So usually when this sort of rejection candles are forming, you can expect the market to have some sort of a pullback before the continuation towards the upside, right? So this is what I'm anticipating for AUDCHF. So this will be a counter trend trade because the weekly is still bullish. So I'm trying to sell. So this is technically counter trend trade, right? If I go to the daily candlestick pattern over here, right now, the daily is technically a sell. This is the lower low and this is the lower high. And if I go to the 4-hour candlestick pattern, it is technically bullish, this being the higher high and this being the higher low. Now, as you can see, this was my entry point. The reason for the entry, I wanted the candle to actually come below here, make some sort of a closure, and then make some sort of a pullback before I go for the sell. And this blue arrow is something that I drew when the market was over here. And I see that the market has pretty much played out the same way that I was expecting it to play out. The 4-hour candle did indeed close below this particular resistance zone. And then it did had its pullback, right, which was pretty significant pullback over here, changing the sell momentum into a buy momentum in the 4-hour candlestick. But the pullback that I was anticipating again had a strong push downwards. And when I saw this particular 4-hour candlestick closure below this particular area of interest, this triggered my interest, saying that, hey, it's time for me to enter, right? So that's when I went to the lower time frame, and on the 30 minutes candlestick, I saw a very strong push towards the downside, this being the 30 minutes lower low. And if I look for the lower high, it's all the way up here. So technically the 30 minutes shifted into a sell with a very strong shift of structure and an engulfing pattern. And I marked a sell limit order over here. I was anticipating some sort of a pullback before the market continued to rally downwards. My sell limit did get triggered. However, the 30 minutes is still rallying upwards. As of right now, as we speak, this was the higher high around here in this region. So it is technically still a 30 minutes sell. And if I go to the 1-hour candlestick, even the 1 hour, this is the lower low, and this will be the lower high. Even on the 1 hour, it is technically still sell. But this has been a pretty much like a lot of pullback, right? So I need the market to sooner or later break below, or it can actually rally upwards, because the 4-hour, I got to bear in mind, it is still bullish, right? So all I know that the 4-hour can be, this is the higher high, this is the higher low, right? And this pullback of the higher low retested this previous structure point, and this push can even break above. And if it does that, most probably the stop loss will be hit. But I gave a sufficient amount of stop loss, about 39 pips, which is almost 5 to 10 pips above the last high point over here, and also above this entire area of interest and above this round psychological number. So I believe this is sufficient breathing space for the trade to play out. But eventually I need the market to roll over here if possible, and eventually hit the TP, hopefully by end of Friday, or probably next week, early next week. If it's not going to hit my stop loss, I expect it to hit my take profit. I also got to bear in mind that the daily EMA is coming right over here, and so far the market seems to be creating this wick, and the daily EMA has been holding. So the moment the daily EMA is clearly broken below, then I'll be super confident that the market is going to rally all the way to my TP, and might even consider to hold further than that. because if I go to the weekly, the EMA is way below down here. So there is actually ample of room for a pullback, but I set my take profit on a weekly scale looking at the previous weekly structure point over here. So there can be a potential reaction happening at this point. So it's ideal to take profit over here. So that's AUDCHF, which is a trade that I entered. Now the second trade is pretty much a trade that is a bit more risky, but there's a lot of reason behind this, which is gold. So I looked at gold and I decided to sell gold. Let me just quickly show that the gold is on a weekly is a buy. This is the higher high and this is the higher low. So the weekly trend is a buy. And if I go to the daily candlestick pattern as well, I gotta really zoom out over here to show that the daily, this was the higher high, and all the way down here, this is the higher low. Now for gold, if I go to the 4-hour candlestick pattern, knowing that the weekly and daily is bullish, is a buy, right? The 4-hour flipped as a sell, right? The 4-hour broke below my zone over here, essentially changing the support into a resistance when it came back over here, and it kind of formed this evening star pattern, right? So if I were to zoom in even closer, let me just bring it up to scale. Okay, this is a better way of looking at it. So basically, the 4-hour candlestick closed below my particular zone, which was previously acting as a support. Over here it was a support, it bounced back, acted as a support, but eventually broke below, and it came back again, now support turning into a resistance, and I could see this curvature, and this sort of curvature is essentially an evening star formation, which indicates that the market is actually topping out and it's going to roll over, right? And the beauty is it kind of did that exactly in this box area, indicating to me that, hey, this is potentially a good reversal zone. The liquidity grab already happened over here in this week, and now it's going to push downwards. And when I went to the lower time frames, right, the 30 minutes candle shifted from buy into a sell over here, right over here, and ever since then it was printing sell. It did try to change back into a buy, but eventually now it's going back into a sell. This was my point of entry right over here. So I wanted to buy the pullback of the retest of this previous structure point and eventually push downwards. I'm lucky right now it's pushing downwards, but the trade just started. A long way to go. The catch over here. Now, ideally, I would want to set a stop loss above this particular weak point, which was the first point where the shift of structure happened, and another 5 to 10 pips extra. This is what I should be setting, right? At least like about 60 pips or so. But unfortunately, my account is still small, and for this particular trade, I gotta be risking 1%, not 0.5%. I gotta risk 1% if I can get like about 30 pips over here for the stop loss, for it to even make sense to set a stop loss above these resistance zones, above this particular 30 minutes week high. And also if I go to the 1-hour candlestick, this will be the 1-hour high, so a few pips above the 1-hour high, so that I don't get wicked out. You see, I almost got wicked out over here at this point of time. If I set my stop loss anywhere down here, I would have been wicked out immediately upon entry, right? So this was the lower low, this was the lower high of the 1-hour candlestick pattern when it was printing. So I saw this wick and I placed about 10-15 pips above that, and the trade is currently still running. But the catch here is my account is still small. So setting, if I were to set the stop loss to be above this weak point and above here by about few pips, instead of 30 pips, I should be giving like about 60 pips, 55 to 60 pips. Then it would actually make sense for my trading style, right? To have like a 1 to 2 risk to reward, right? So right now, I realize that the account is still small. And why do I keep saying that? Is because to take this particular trade, I only placed 0.01 lot size. So that is essentially the smallest lot size I could place for gold. And that's really not really calculating what is the right lot size, because I'm not calculating the lot size in order to get 0.01. I know that with 0.01, this is the best I can do. So the only way for me to logically be able to trade gold is to have a bigger account. Only then I can size up the stop loss accordingly. If not, this is not really an ideal stop loss placement. Well, for this case right now, yes it is, But this is one of the reasons in why I'm restricting myself from trading gold at the moment. I believe when my account is beyond $5,000 to $7,000 already, then it's a reasonable amount to trade gold. To be very honest, if my account is already 10,000, then at that point of time, I could place like about 100 pips with 0.01 lot size in gold. Then it will make more sense for me to be able to trade gold, because the stop loss will eventually make sense. Right now, for this particular trade, the stop loss did make sense. Therefore, I got a 1 to 3.5 risk to reward, and I decided to go for it. And the trade is currently in, I would say, a very small profit. Haven't decided yet, but I see there is a potential for it to break below. The moment it breaks below this 4 hour, right, and create a new lower low, then I'll be confident that eventually it's going to rally to this particular box, right? Until then, until it doesn't significantly break over here, gold can always be super volatile, knowing that all the geopolitical issues that's going on right now. So I'll continue to keep an eye on this. But basically, yeah, this is the second trade that I opened. Gold, XAUUSD is a sell right now. So AUDCHF was one trade that is currently in a slight drawdown that I sold, and gold is another trade, XAUUSD, that I currently sold. And the other trade is the same trade, CADJPY, that I'm still holding. This trade, like I mentioned, I got wicked out previously, and I still saw some potential for it to move up, but so far it is not looking that way. And if I get stopped out again, then that's it. I'm pretty much done trading for the day. Having another two trades that is still open right now, AUDCHF and gold, I'll just conclude. If at all this trade doesn't hold this area and it breaks below and eventually hit my stop loss, then I'll leave it as it be and analyze the market again for the following week. But if it does bounce back, then I'll continue to hold to see what CADJPY can do for me. So that's pretty much all the three trades, guys. And thank you so much for your time, and all the very best to you. Thank you. Have a good day.